trade illustration. One, I think the first key qualification would be that you're interested in trading the Tesla earnings event solely as somewhat of an earnings trade, because we're going to do something very short term here. But also, if we're going to just solely trade the earnings trade, we oftentimes talk about waiting until that kind of last possible moment to do so that you get sort of the price and you can truly trade that binary event. So the second kind of, I guess, criteria that would be necessary would be that you see an opportunity in this sell-off today that maybe won't hold until that moment. So stock under pressure, but still an interest to trade around that earnings event. What we're looking at doing is selling next week's 190, 185 put vertical for a $1 credit. So in this case, the break even would be 189. Total risk would be 400. The width of the strikes net of the $1 credit. $1 credit, of course, correlates to a $100 max possible profit on a neutral to bullish trade. So Jenny, selling an elevated implied volatility, binary event that will possibly cause the movement, and a market maker move, which of course is just doing some math, looking at real-time option prices and spitting out sort of a one standard deviation range of outcomes, suggests somewhere around, let's say, a $20 or so move, which would target around our break even. So all those things kind of converging to once. And again, if you feel Tesla was still going to go lower over the next week prior to that earnings event, there would be no reason to feel obligated or even the urgency to do this type of a trade now. You would simply wait and possibly even get better prices. But if you think this is a near-term opportunity, still have interest to trade that binary event, but want to take advantage of today's down move to establish that position, this is something that may fit some of those kind of boxes if you were going down a checklist.
We look sort of at these trade types very frequently on this show, and of course customizable. If you feel differently on Tesla, which, like I mentioned, I think that a lot of people feel very oppositely, at least in this name. But our next name is another controversial name. I do think that Meta typically brings up a lot of controversy. I think there's political headwinds tied to this name, and for some reason, Rick, it's a name that people love to hate. People love to hate Mark Zuckerberg, and I don't get it, because I saw him the other day on TV and I was thinking he doesn't look like a mean guy, but nonetheless, sharp, brutal though. I mean, other than Mark Zuckerberg, we can clearly see this is a company that's struggling alongside a lot of these social media companies that were once, I'd say propped up during the pandemic on some strength, on some staying at home trends, but man, Meta has not been able to catch a break this summer.
Well, it seems like the footage from the new, Meta clips that they were making the rounds this week were not very impressive to a lot of people who saw them. Even I think the metaverse seems kind of interesting, and it looked fairly lame to me as well. But looking at the chart here, new yearly lows around 123 yesterday. We haven't been able to make a convincing move above that 63-day exponential moving average since the beginning of the year. It looks like price has encountered resistance there, 5 separate times or so. Price in the broader picture is in a slight falling wedge pattern, which is typically regarded as bullish. It may look like those two lines are parallel, but they're actually slightly sloping toward each other. And this is, like I said, this is often regarded as being a more bullish pattern. Really, it can go either way, though. The important thing is to look for a breakout beyond those two, either one of those two trend lines. So looking at point B next, we can see that we've got our 21-day exponential moving average in yellow first. That would be the first point of resistance to keep your eye on near 138. The next point is at point B. It's the confluence of that orange 63-day EMA and the trend line near about 154 or so. So that's the kind of thing you want to look for, is these confluences of different indicators lining up near the same spot to give extra weight to a certain price level. So if we could see an energetic breakout if price does move beyond that point. It would mean, perhaps a lot of stop orders were being triggered and price could get into a bit of a squeeze there. So finally, looking at point C, some bullish divergence on the RSI. By that I mean price was making new lows, but RSI was actually not. And RSI did manage to stay out of that oversold area for the most part on the second leg downward there. So that could be a sign that there's some steam building up here, some momentum starting to take hold in this name. But really, it remains to be seen. That kind of is juxtaposed with, making new yearly lows yesterday at the same time.
They have been a pretty significant deal, and they've been a tremendous event for volatility. We don't have earnings slated for next week. It's out of $50 in max profit.